All right, Canada, grab your double and buckle up. The Bank of Canada just slashed rates by 50 basis points, and I've got one question. How weak will our economy be in 2025, and will our government in Ottawa understand how bad it will get? This is like pouring maple syrup on a forest fire, sweet, sticky, and utterly useless. We're facing unemployment, shaky job security, zero traction on new housing, a sky-high cost of living, and a government that continues to spend money like it's monopoly money. And now, the Bank of Canada cutting rates by 50 basis points will be celebrated by our finance minister. Spoiler alert, things will get worse with unemployment and lower GDP growth in the new year. Bank of Canada rate drops indicate we are in trouble. A 50 basis point rate cut should, in theory, stimulate the economy, cheaper borrowing, more spending, yada, yada. But let's get real. This is not 2008. Unemployment is rising. People aren't running out to buy a house, a Tesla, or any big ticket items when they're worried about their job. New housing starts are at almost zero. Builders aren't breaking ground when material costs are astronomical, and municipal red tape could strangle a giraffe. Cost of living is through the stratosphere. Groceries are so expensive, you're debating whether to eat kale or just eat the receipt. This rate cut isn't solving any of that. It's just giving us all a slightly cheaper deck chair on the Titanic. Let's talk about housing. The 50 basis point cut might shave a bit off your monthly variable mortgage payment if you even get approved for a mortgage, but will it fix the fact that new housing starts are barely crawling thanks to sky-high development charges and a lack of skilled labor? The government's Housing Accelerator Fund is moving slower than a traffic jam in Toronto. Immigration targets are still higher than they were 10 years ago, and we still have increased international students, non-permanent workers, and a spike in asylum seekers at inland offices. But we're still not building enough roofs to keep all of them. This isn't a housing market, it's a pressure cooker, and rate cuts aren't going to stop the lid from blowing off. Calling this a housing strategy is like calling a Timbit a balanced breakfast. It might feel good for a minute, but it's not sustainable. Now let's look at the labor market. With unemployment ticking up and job security getting shakier than a Jenga tower at a frat party, a rate cut won't inspire confidence. People aren't going to splurge on big ticket items when they're worried about their next paycheck. The fact is, Canada is shedding tens of thousands of private sector jobs every month, and many more coming in the new year. And instead of addressing the structural issues like retraining workers for high demand industries or supporting small businesses, our government just celebrates rate cuts. It's like handing out umbrellas during a hurricane. Nice gesture, but it won't stop the flooding. Where's the government in all of this? Nowhere to be found. Fiscal restraint? Never heard of it. While the Bank of Canada is trying to steer the ship, the federal government is drilling holes in the hull with out-of-control spending. From record deficits to unbridled stimulus programs that have overstayed their welcome, there's zero alignment between monetary and fiscal policy. The lack of leadership creates confusion, and confusion kills confidence. Whether you're a business owner, a first-time buyer, or just someone trying to figure out if you can afford butter this week. Our Minister of Finance set fiscal guardrails and then blows through the self-imposed limits and drives off the cliff. Our government's approach to spending is like your buddy at an open bar, reckless, short-sighted, and everyone's going to regret it in the morning. So what do? Canadians need to be smart, skeptical, and strategic. Here's how. 1, play defense. If you're a homeowner or investor, use this rate cut to pay down debt. Don't fall in the trap of over-leveraging because rates seem lower. Spoiler alert, they won't stay low forever. Number 2, demand accountability. Write to your MP, share your frustrations, and start asking tough questions about government spending and housing policies. These MPs work for us, remember? And 3, diversify your income. Whether it's picking up a side hustle, investing in skills that are in demand, or starting a small business, don't rely on just one stream of income in this volatile economy. Think of this rate cut as the Bank of Canada giving us a gift card. Nice to have, but you can't live off of it. And you'll probably lose it in the drawer before it's useful. The reality is Canada's economy is in a tough spot. The Bank of Canada's rate cut is a band-aid on a bullet wound, and the federal government is too busy spending to notice the bleeding. But we can't afford to wait for leadership that isn't coming. Canada needs to be proactive, focusing on what we can control, demanding better from our leaders, and building financial resilience in our own lives. Because here's the truth. The economic challenges we're facing aren't going away anytime soon. But with the right mindset and strategies, we can navigate them together. So Canada, let's stop waiting for the cavalry and start being our own heroes. And if you're struggling to make sense of your mortgage, your finances, or this entire economic circus, OwlMortgage.ca is here to help. We give you honest advice, tailored strategies, and maybe even a little peace of mind in the storm. Thanks for tuning in, and remember, financial resilience isn't just about surviving, it's about thriving. I'm Vince Gaetano signing off. Don't forget to like, subscribe, and share with anyone who needs a reminder that a 50 basis point cut isn't a get out of jail free card. It's a wake-up call.